Most traders blow their account trying to guess the market highs and the market lows, like the double tops, the double bottoms, the fair value gaps, and so forth. But the problem is they overcomplicate a lot of this. Well, the truth is, in this video, I'm going to be breaking down the most simplest strategy that you can use from old theories that uses a lot of these ICT concepts, smart money concepts, wave theory concepts, and all the above of what we use to consistently get payouts if you're trading a prop firm, or also to consistently grow an account, whether if this is a small, mid-size, or large. Once again, if you don't know who I am, I go by Solo ETV, and what I do on my channel is show you guys how to consistently be a profitable trader, no matter your skill set, no matter the mental, no matter where you're at with your account. I'm here to guide you, as I've done a $4,000 to $40,000 on my YouTube live stream, and also currently we're growing an account right now. So let's go ahead and dive into the window, because this is a easy to follow strategy from 1,000 to 10K that you can do starting today. Let's get to it. So let me show you guys my actual account that we're doing this with. Now, as you see here, it is a bigger account. However, this works for you, as you can do the exact same thing I'm doing here, just on a smaller lot size. And that is all that is going to change here. The balance is at 88. We started with 50 and we currently got it growing and growing. Now, as you see, we have some losses. Of course, that happens. Today was actually the day of me recording this. This is actually 2 winning trades we were able to place. If you look to the left side, you see that all of these trades were placed just off of one asset. We don't trade anything else on this account. This is strictly that. Now, as far as the strategy, this strategy does work very well for particular brokers, because you have to consider that a lot of brokers require bigger spreads, and also they have something called slippage. Now, this is why we trade as a whole together with GatesFX. This is the current broker we are currently using at this time. So if you need a broker and you want to start scaling a small account or a large account, you can go with GatesFX and go with their 100% Tradelocker sign-on bonus, which basically means if you deposit $1,000, they will match that with another $1,000. This gives you the leverage to actually start scaling your account, as it helps us and our entire trader community to do the same. You also have the ability to even go up to 1 to 1,000 leverage, what gives you more freedom to hold out a little bit of trades a little longer if you want to, if you are a high risker like myself. But this gives you that, and you will have everything you need with the broker we use, which is GatesFX. If you want that, the link is down below. Once you get in tune and deposit funds, you can also even join our community for free as an extra tool to help you guys become better traders. So why does this strategy work? So wave 3, we're going to be talking about this method, how wave 3 is the longest, fastest, and cleanest Elliott Wave move. Most traders chase wave 5 without them even knowing. Most traders also trade wave 1 without them even knowing. Wave 1 breaks out and it gets stopped. This is known as what we call the stop hunt, where you're seeing the market is going into a equal low phase, and immediately it breaks through and you're like, damn, it grabbed liquidity. Why did I not wait? Or stop hunt, or stop loss. Why did I not wait? And then it goes up again and it comes right back down for another grab, and then it goes up. Well, guys, this is what we trade right here. And this is why we're so profitable in our account, because we're consistently looking for these waves and trying to catch and maximize as much profits as we can. So I'm going to be breaking that and showing you a little bit more further in this video. But first, you have to understand the logic behind this in order for it to make sense. So going back, you only need to catch one good wave 2 to wave 3 entry per session to grow fast. We're not trading 20 to 40 different trades in a week. We're focusing on at least 1 to 2 setups per day. So if you guys did not know, looking at my account, you see, yes, there's multiple trades that's been taken, but that is because I look for 2 setups per day. In 2 setups, there's 2 trades. I take one trade to a particular level and I take another trade to a particular level, following this whole entire map that I'm gonna break down now. So let's go back. This is pretty much in theory of what a perfect structural Elliott Wave play looks like that we want to catch. So typically traders will see the first move going up and then they'll see the first pull. Now here's where it gets really interesting. A lot of traders don't know this, but when you guys are trading the pullback, you can measure when the pullback will be finished before you even know when the pullback will be finished. And what I essentially mean by this is every pullback is measured off of 3 to 5 legs. And when you can identify each leg, you would then now know this correction that was formed is done. And that is when you will now know this entry is valid. And this is when you will now know this pullback into this imbalance is valid. And that is all we want to look for in the market. Let me explain it. So coming to our step-by-step blueprint, we want to first identify the range. And what I mean by identifying the range is use London or New York session highs and lows. After that, you want to confirm the market structure forming what we call a corrective wave, which is wave 2. Now, when I said earlier, we look for 3 to 5 legs off of the corrective wave, which is really the pullback. That is what we're calling wave 2, which is basically this move right here. When you get your first move to the upside and the market decides to drop again, that is wave 2. But just because you see the little first move to the downside, that is not the end of that corrective wave. So if you are a trader that is waiting on the very first pullback and you're ready to buy it, best believe the market is going to come up, grab liquidity, and come back down, grab more liquidity. And that is exactly what I had identified here as this all being wave 2, which is this move right here. So if we go back, you see now step 2, you want to measure the retracement. This is going to give you the valid fair value gaps, the valid imbalance levels, the valid POI area of interest, and so forth. You want to pull your fibs from the beginning of wave 1 high or the low and the end of wave 1, or basically the beginning of wave 2 high or the low. What do I mean? If you look at the very first move that happened to the upside, which was this swing low going to this high, you draw your fibs from here to here. You're going to use my favorite levels, which is the 44% in the 61.8 zone. This is where you're going to be looking for valid POIs, valid imbalance levels, and fair value gaps. When I say POIs, this is adding all of that together into one. A valid POI is an equals imbalance or liquidity grabs inside of the 44% plus, which is also the 618 zone, is only valid if price respects the structure. So remember, these levels of the fibs are going to give you the extra confidence and confluence essentially to let you know what level is actually valid. When you guys ask the question, there's 5 different POI levels. I don't know which level to pay attention to. You use your fibs tool to give you the most accurate one. If it's this one, then you go for that one. And that is it. Now, after that, step 4 comes in. Step 4 is the confirmation entry. You want to wait for a power candle to close across the 9 EMA. This is going to give you the true price volume that you need to identify that the price is actually strong. And then you want to look for that engulfing or that strong wick rejection. That is your green light. Now, as far as your exit plan, your target is going to be fibs 0.27 for the minimum, at least a 1 to 2. Let me show you guys how this looks in the chart. So coming into the chart now, we have oil. I have the sessions indicator, which is the one that has the color blocks, the yellow, the green, and the blue. So the yellow is going to be your London, the green is going to be New York, and then the blue is going to be Tokyo. Remember what I said earlier, that the goal is to identify the range. Use London or New York sessions highs and lows to help confirm if the market is forming what we call a pullback or if it's forming a trend or if it's in a trend. Going back to the charts, you see during London session, New York just hit around 9:30 a.m. to be exact. Seeing that, remember, the goal is to see if we're getting aggressive buying power, and if so, this is a trend. The moment we start to see pullbacks, this identifies that this may be what we call our corrective wave. Now, the cool thing about London session, and that's happening towards the end of London, is it is actually forming the corrective wave now. What we have to do is look to see where the first pull had happened, which was this pullback right here. Notice immediately it pulled and then it went right back up to come right back down to create what we call equal lows. Now, remember what I said earlier, the goal is to not trade the first pullback because yes, that is a pullback, but expect the bigger pull. And that is exactly what we see. We see market came up again, and then it went back down. Even though it did not sweep this liquidity, essentially sometimes it does, it created an equal low, which basically made this an equal low. But given the fact, if we go back, you see that it created the equal low. And then here we had got the engulfing candle closing above the 9 EMA, which is my white line that you're seeing here. Now, remember, you always want to try to go for that 1 to 2. If you do that, we're going to put our stop loss just pips away from the entry candle, which is just this one right here, and I'm only going to go for like 5 to 10. That's usually what you want to go for. Your target is to go for a 1 to 2. That's your first trade. Now your second trade in the same setup is to go for the 1 to 3 or above. I prefer to go 1 to 3s because I can catch more rewards, as you seen earlier in the video what we were able to do from just this account. Now if we go ahead and fast forward this, you see that this played out very well for both trades. This little same setup, you can spot it on 5-minute time frame, 1 hour time frame, the daily time frame. It does not matter. Let me show you guys something else. Now that you understand a full game plan, you have to keep in mind that this is also about knowing how to be disciplined in out of trade. Every time we see the setup, we trade it. If we don't trade it. And that is the goal here. So if you feel like you really want more help to help you scale and grow, I'm here to help you. You can join our community for free. Like I said, you can tune in with GatesFX and tap in and get in for free, or you can just go straight to TradeWithSolo.com. Either way it goes, watching my videos on YouTube, tuning into our lives, tuning into my courses, all of that, I'm here to help and guide you to the right profits. Other than that, your boy Solo. I appreciate you. I'm gonna see you guys in my next video. Peace.